the types of the bank in Singapore markets can be classified into two main categories, which is foreign bank and also the local bank. At the 2001, the Singapore governments have given a greater liberty for the foreign banks to offer their services to the customers. So it has caused the numbers of the local bank reduced by more than half. And as of now, there are more than 119 foreign commercial banks in the Singapore, of which 54 are the wholesale bank, 37 are the offshore bank, and 28 are the full banks. Next is the local bank in the Singapore market. There are three major local banks in Singapore market, which we have DBS Bank, OCBC Bank, and the UOB Bank. Based on the latest data, which is until the 2017, it shows the concentrations in the Singapore market is 89.33%, which means the Singapore market is only controlled by a few banks, which is DBS Bank, OCBC Bank, and UOB Bank. These three banks have hold total assets of over 1 trillion in Singapore. Okay, next we have the foreign bank presence in the Singapore. There are also some major foreign banks in the Singapore markets, which we have like Citibank, HSBC Bank, Maybank, Standard Chartered, and so on. Although the foreign banks with the full bank license, they can offer the commercial services to the clients, but they are restricted by the numbers of the branches and also the ATM compared with the local bank in the Singapore. Next is international banks. Of course, there are international banks that present in the Singapore markets, which we have Standard Chartered, BNP Paribas, and HSBC, and actually has still a lot, but I never mentioned that.
I would like to present about the policy towards foreign bank entries and regulations. So as we know, actually the financial and banking sector in Singapore is under supervision of MAS, which established under the MAS Act. So during 17 May 1999, MAS was introduced a 5-year liberalization program, which aimed to liberalize the Singapore's banking and financial sector. So the main goal for this program is to set up a structured competitive environment in that industry, especially the electronic delivery channels. So via this program, there are huge access of foreign financial institutions into Singapore domestic markets. So there are two main types of bank license under Banking Act in Singapore, so which are full bank license and also wholesale bank license. So in Banking Act, all local full banks can enjoy a full range of banking business. However, for foreign banks with full bank license can only engage a limited branches and also ATMs. But for those foreign banks has been granted for qualifying full bank, or we can call as QFB scheme. They can operate more branches and ATMs like local full banks. So in Singapore, there are only 27 of foreign bank out of total 117 are qualified for QFB scheme. For example, HSBC, Citibank, Standard Chartered, Maybank, ABN AMRO, and also BNP Paribas. Okay. Okay, so for foreign banks in Singapore actually can be divided into three types, which are foreign full bank, foreign wholesale bank, and also foreign offshore bank. So they common incorporate in a jurisdiction other than Singapore and also operating branches within Singapore. Okay, so according to Section 40 Blanket 1 Banking Act in Singapore, it requests all banks in Singapore maintain a specific percent of eligible assets to meet with their liabilities. So for instance, they need to maintain at least $5 million of eligible asset in Singapore at all the times. Then for foreign full banks is actually is required achieve asset maintenance ratio not less than 0.35 and 0.15 for foreign wholesale banks. So last but not least, for those foreign bank or financial institutions are desire to open their branches or representative office in Singapore, so they need to refer MAS to submit their application. So application form for foreign banking and financial institutions are including background, their financial indicators on global basis and credit ratings, the overview of the FI's strategies in Singapore, okay, so and also the detailed plan for each main business area of Singapore office, and the last FI's home country banking system information also. Okay, so for me as a comprehensive look, we can clearly understand that the banking regulation in Singapore is more restrict than our perception. Okay, is to make sure that the domestic banks can growing up in competitive global banking industry. At the same time, they also guarantee the benefit of foreign banks. So actually, it's very difficult for a foreign bank to obtain a QFB scheme, as only 23% from total foreign bank are granted.
So now I will talk about what banks do to help governments during COVID-19 according to the Monetary Authority of Singapore system. MAS has cooperated with the banks to help the economy of Singapore by relief package. There are three components in the package. First component, help individual with loans and insurance commitment. A, deferments of property loans repayments. Individual may apply to defer their principal or both principal and interest payments. There's no interest will be charged at the deferment. B, deferments of insurance premium payments. The issuer will only approve the application of the renewal or expiry date of policy between 1st of April to 30 September 2020. C, lower interest on personal unsecured credit. Individual may apply to convert their credit card or revolving credit line outstanding balances to a lower interest term loans. The converted term loan can last for 5 years based on the ability of the individuals to meet their monthly minimum repayments. Individuals who have suffered more than 25% loss of their monthly income after 1st of February will only be approved. D, flexible installment plans for general insurance. Individuals may apply for the flexible premium installment plans while maintaining the insurance protection for the payout periods. The flexible installment plan helps individuals in reducing the size of payable premium as they can repay it at the longer periods. So for the second component, support SME in the insurance cover and bank credit. A, deferments of principal payments on SME loans. So individuals who are still paying the interest and in good credit score will be approved. The loan repayment schedule can be adjusted. B, lower interest on SME loans. MAS SGD facility for loans granted in collaborated with Enterprise Singapore to lend the Singapore dollar at the interest rate 0.1% per annum. This means that banks in Singapore may apply for the lower cost of funds. Therefore, when the cost of funds of banks in Singapore reduce, the interest rate charged to the SME will reduce too. C, deferments of insurance premium payments. This can help the SME to escape from paying lump sum payment at the start of the policy periods. For the third component, ensures the liquidity of interbank funding market. MAS is receiving the ample Singapore dollar liquidity from the daily money market operation and provide it to the banking system. This is to ensure the banks in Singapore have sufficient liquidity. Additionally, MAS established a new MAS USD facility to provide sufficient USD fundings to banks in Singapore. This is to ensure the stability of liquidity USD conditions.
Okay, next I will explain the part of what bank can do and cannot do during this time, and any new restrictions or regulations imposed by the regulator. Okay, Monetary Authority of Singapore has upheld the scoping of the COVID-19 Temporary Measure Act 2020 to supply transitory security to SME without disciplined interface of bank, and Singapore rose as an international financial center. For this act, the contractual rights of banks are not influenced, other than the correct to uphold the mentioned above security for a default on an advance secured under the Act for a 6-month period is from 20 April to 19 October 2020. Okay, besides that, Monetary Authority of Singapore also issued an advisory to all banking institutions located in Singapore to instruct them to implement safe distancing measures in all aspects of their daily business operations, particularly customer face-to-face contact. The financial institutions will keep on operate with reducing staffing on their premise. Okay, besides that, as a customer, customers should utilize online applications such as internet banking or the different customer service portal for their online transactions. And banks in Singapore have implemented a crowd management system at the branches to ensure safe distance between the customer and staff, and have increased the cleaning and disinfections of their branches ATM. Those customers not wearing face masks when visiting bank branches will be refrained entry as part of additional steps taken by banks to reduce the risk of transmissions of COVID-19. Okay, for the last, to help with the social distancing measure, only 6 customers are allowed to enter the banking hall at the same time.
There are several possible risks faced by banks during and after COVID-19 outbreak. First, net profit decrease. The bank will lose profit due to set aside the loan loss provision. The purpose of this provision is to cover the potential losses such as bad loan. For example, DBS first quarter profit was 29% drop due to DBS set aside the loan loss provision. More than half of this provision were used to against with the economic impact from the pandemic. Second, credit risk. Individual and company may fail to repay the loan payment to the bank. This is because the individual may lose their job in this time, and the company cannot run their business as usual and no earn more profit in this time. It may lead to the bad loan in the bank increase. Third, operational risk. The closing branches, meaning that some of the employee has no work at this time and lead to the workforce not at full capacity. Cybersecurity is other operational risk that the bank may face. A breach of the bank's cybersecurity may lead to the bank to lose capital and trust from customers.